All right, let's talk Home Depot. They just dropped their latest earnings, and on the surface, it looked like a bit of a disappointment, but then the stock rallied hard. So today, we're going to unpack that whole situation and figure out exactly what Wall Street is seeing that maybe the rest of us missed.
And that's really the big question here, isn't it? This is the puzzle we're here to solve. On paper, the company missed its targets, but the stock immediately started climbing. So what on earth did investors see that wasn't in the big, splashy headlines?
Okay, so first, let's just lay out the facts. Wall Street was looking for adjusted earnings at least $4.71 a share. Home Depot came in at $4.68. Same deal on revenue, they landed just a little bit shy of what everyone was expecting. So by the numbers, it was a clear miss, no doubt about it.
And yet, this is what the market did. A really powerful rally, up over 3%. Now that's not the market shrugging. That's the market making a statement. This contradiction right here is our first clue that the real story wasn't about the slight miss at all. It was about something else happening just beneath the surface.
So to really understand this rally, we've got to look past that 3-month total number and actually break the quarter down month by month. Because this is where we find the trend, the powerful trend that investors really locked onto.
Now this chart tells the real story of the quarter. Just look at the trend in their comparable sales. That's a super important metric that measures sales at existing stores. The quarter kicked off with a tiny dip in May, it recovered to flat in June, and then it just absolutely took off in July, with comps jumping over 3%. That sharp acceleration was a massive signal to investors that the business had some serious momentum heading into the second half of the year.
And this wasn't just some 1-month fluke. Management really hammered this point home on their earnings call. They said that the broader customer engagement was, and I'm quoting here, the strongest we've seen in over 2 years. Now that is the kind of language that gives investors a ton of confidence that this July trend is for real.
Okay, so the really crucial part is how they got that growth. That tiny little dip in total transactions, well, that was actually a strategic choice. They just ran fewer promotions on small stuff, like garden items. But at the same time, the average customer's bill went up, and that was powered by a nearly 3% jump in big ticket sales. We're talking appliances, major project materials, things over $1,000. That signals much healthier, higher quality growth. But that strong monthly momentum, that was only half the story. The other reason for the rally, and you could argue it's the bigger reason, is that Wall Street is getting way more confident in Home Depot's long-term strategy, which is to just completely dominate the professional contractor market.
And to pull this off, Home Depot is making some absolutely massive moves. I mean, they just closed an $18 billion acquisition of SRS Distribution and then immediately announced a $5.5 billion deal for GMS. These are not random buys. These are calculated, back-to-back chess moves to build a pro ecosystem that basically no competitor can even touch.
And this number right here, this just shows you the sheer scale of their ambition. With these acquisitions, Home Depot has blown up its total addressable market to a staggering $1 trillion. To put that in perspective, they're not just a home improvement store anymore. They are now going after the entire professional supply and distribution market. It's a whole new ballgame. And what's great is we already have proof that the strategy is working. CEO Ted Decker said it very plainly on the call. Their biggest acquisition, SRS, is already exceeding their expectations. For Wall Street, hearing that a multi-billion-dollar bet is already paying off ahead of schedule, well, that's just a huge vote of confidence in management's execution.
So the final piece of this whole puzzle was management's steady hand. Their forward-looking guidance and what they said about the broader economy. That's what really sealed the deal for investors.
And this brings us to a really crucial signal, management's confidence. In spite of that small miss in Q2, they didn't even flinch. They reaffirmed their full-year guidance on every single metric. And that sends a crystal clear message to the market, basically saying, hey, those quarterly numbers were just noise. Our business is exactly where we expect it to be.
The Q&A session with the analysts really confirmed this whole forward-looking mindset. The questions, they weren't about the small miss. They were all about the big picture. Analysts were laser-focused on these macro tailwinds, like potential Fed rate cuts, unfreezing the housing market, and this idea that big projects aren't actually being canceled, they're just being deferred for a bit.
So, we've explained the market's reaction. Now it's time to put on our analyst hat. Here is our official take on what all this means for the stock going forward, and what to watch for ahead of the next earnings call. So, our rating on the stock is outperform. We think the market is definitely starting to get the story, but we believe the full long-term potential of this whole pro ecosystem build-out is still not fully priced into the shares. There's more room to run.
So here's the core idea. Our thesis is that the market still doesn't fully appreciate just how profitable and dominant Home Depot is going to become once these pro acquisitions are fully integrated. In our view, the strong organic sales provide a really solid floor for the stock, while the pro strategy creates this massive long-term upside. We're watching 3 key catalysts here: the official closing of the GMS deal, any rate cuts from the Fed, and any new evidence showing that these new businesses are boosting sales for the core Home Depot stores.
So, while all the headlines were focused on a small miss, the real story here is one of accelerating momentum and a really bold strategic pivot that Wall Street is just now beginning to reward. And just as a reminder, this is for informational purposes only and is not financial advice.